Hey everyone, and welcome back to the channel. It's been a wild ride in the crypto markets lately, hasn't it? One day you're feeling on top of the world, the next you're refreshing your portfolio every 5 minutes. If you've been feeling that mix of excitement and anxiety, you are definitely not alone. Today, we're diving deep into the single biggest question on every crypto investor's mind. What is going on with Bitcoin? We've seen it consolidate, tease a breakout, and then pull back, leaving everyone scratching their heads. The price action has been a masterclass in confusion, creating a tense standoff between the bulls and the bears. On one side of the ring, we have the bulls, pointing to the fact that Bitcoin is impressively holding strong above the critical psychological and technical support level of $110,000. This resilience, even in the face of macroeconomic headwinds, is a powerful statement. But on the other side, the bears are growling louder. We're hearing a chorus of analysts and technical experts sounding the alarm, pointing to chart patterns and on-chain data that suggest a potential correction is looming. Some are even calling for a dip down to the $95,000 mark, a level that would certainly test the resolve of even the most seasoned hodlers. This sets up the ultimate question for the weeks ahead. Are we coiling up for a massive leg up, a parabolic move that could send Bitcoin to new all-time highs? Or is this the calm before the storm, a prelude to a much-needed and potentially painful, deeper correction? The answer to this question could define the next quarter for the entire crypto space. Navigating this uncertainty is exactly what we're going to do in this video. So make sure you stick around until the very end, because I'm going to equip you with a complete 360-degree view of the market. We're going to cut through the noise and focus on the data that actually matters. In this deep dive, we're going to cover: first, we'll analyze the current state of play, looking at key on-chain metrics and what the derivatives market is telling us. Next, we'll tackle the dreaded September effect, exploring why this month is historically volatile. Then we'll build the powerful bullish case, exploring the fundamental drivers that could propel Bitcoin higher, and most importantly, we'll bring it all together into a practical strategy. I'll share my thoughts on how you can position yourself to navigate this choppy market, manage your risk, and identify potential opportunities. By the end of this video, you'll have a much clearer roadmap for what to expect and how to react. Let's start with where we are today. Bitcoin is trading around $110,000. The entire crypto market has slipped to about $3.76 trillion in market cap. Ethereum has dropped to around $4,400, and many altcoins are showing double-digit weekly losses. This week alone, we saw a $44 billion wipeout in just 24 hours, triggered by whale sell-offs and options expiry. That sudden shock really shook investor confidence. On-screen, price chart showing Bitcoin's recent dip plus total market cap graph. Now the big question, why did Bitcoin fall? After a period of relative stability, the price took a nosedive, leaving many investors scratching their heads. So, what's the deal? Was it one single event that sent the market tumbling, or was it a perfect storm of factors brewing just beneath the surface? Well, as is often the case in the wild world of crypto, it was a little bit of everything. Let's break down the three main reasons behind the recent drop. First up, we have what the crypto community calls whale movements. Now, who are these whales? They're the giants of the Bitcoin ocean, individuals or institutions holding massive amounts of BTC. When they make a move, the market feels the ripples. In the days leading up to the drop, on-chain analysts spotted a colossal migration of Bitcoin, billions of dollars worth of BTC moving from private wallets to major exchanges. Think of a private wallet as a personal safe for long-term holding. An exchange is a marketplace for selling. So when whales move coins onto exchanges, it's a massive red flag for the market. It signals a potential sell-off is imminent. This influx of supply creates immense downward pressure and the market reacts instantly. The fear of a whale-sized dump causes smaller investors to sell in anticipation, creating a cascade of selling that pushes the price lower, even before the whales have made their final move. The second major factor was the monthly options expiry. Think of options as sophisticated bets on Bitcoin's future price. At the end of every month, a huge batch of these contracts expires, often bringing a wave of volatility. This September was particularly intense, with billions of dollars in Bitcoin options on the line. A key concept here is the max pain price. It's the price point where the largest number of options holders lose their money. As the expiry date approached, the market price was well above the max pain price. This created a sort of magnetic pull downwards, as powerful market players may have an incentive to push the price toward that max pain level. As the price began to fall, it triggered a cascade of liquidations. These are forced sales from traders using borrowed money. Their positions get automatically closed, flooding the market with more sell orders and accelerating the crash. And finally, we can't ignore a powerful psychological factor: the September curse. This isn't just crypto superstition, it's a well-documented historical trend. Looking back at the data, September has been a brutal month for Bitcoin almost every year since 2013, earning it the nickname Red September. In the last decade, the average return for the month is a dismal -5%. This historical pattern has created a powerful self-fulfilling prophecy. Traders, aware of the curse, anticipate a drop. They might sell off their holdings at the end of August or open positions betting on a price decline. This collective preemptive selling creates the very downturn everyone was expecting. While some analysts tie this to real-world events like the end of the fiscal quarter, the psychological impact is undeniable. The expectation of a red month becomes the reason for the red month. But hold on, this isn't just about Bitcoin falling. There's also a much bigger narrative at play. The US Federal Reserve is signaling possible interest rate cuts later this year. That's usually bullish for risk assets like Bitcoin. Exchange balances are at multi-year lows. That means fewer Bitcoins are sitting on exchanges ready to be sold. Long-term holders, the hodlers, aren't budging. They're actually buying more during the dip. On screen, Fed interest rate chart plus Glassnode supply on exchanges. Still, let's not ignore the risks. Bears are making some strong points too. If Bitcoin breaks below the $100K support zone, analysts say we could easily see a drop to $93K, $95K. A slowing global economy and potential regulatory actions could spook investors. And remember, September historically isn't kind to Bitcoin. In fact, just last year we saw a 12% dip during the same month. On screen, bearish price path chart showing $100K, $93K scenario. On the other side, bulls argue this dip is just a healthy correction. Historically, after bad Septembers, Bitcoin has often rebounded strongly in Q4. For example, in 2020 and 2021, Bitcoin rallied massively after September. Institutions are quietly accumulating. Reports show large funds buying dips instead of selling. Plus, altcoins like Solana and XRP are showing relative strength, suggesting fresh capital could flow back into majors like Bitcoin. On screen, 2020-2021 BTC rally after September, Solana and XRP price action. So, what does this mean for you? If you're a trader, watch the key levels. $110K for short-term support, $100K as major support, and $120K as resistance. Use stop losses. Volatility is high, and you don't want to get liquidated. If you're a long-term investor, remember the 4-year Bitcoin halving cycle. We're still in the bullish phase, and dips are often opportunities. Dollar cost averaging is a safer approach instead of going all in at once, and for everyone, stay updated on macro events like Fed announcements because they directly impact liquidity and risk appetite. So to wrap up, Bitcoin is at a fascinating crossroads. We've seen the macroeconomic pressures from inflation and Fed policy. We've analyzed the on-chain data, which shows a tug-of-war between short-term sellers and long-term accumulators. And the technical charts confirm it. A major battle is being fought at a critical support level, setting the stage for a massive move. This brings us to the two dominant narratives. First, the bears. They're pointing to worrying technicals like a potential bearish cross on the weekly chart, and see the recent price action as a classic distribution pattern. They argue that a break below our current support could trigger a cascade of liquidations, sending us down to test their target of $95K. With ongoing global economic uncertainty, they warn that investors might flee high-risk assets like Bitcoin, accelerating the downward momentum. But the bulls are holding their ground, viewing this as a classic shakeout before the next leg up. They're focused on the bullish on-chain metrics like long-term holder supply hitting new highs and exchange reserves continuing to drop, suggesting a supply shock is brewing. They're also banking on historical precedent, as Q4 has often been incredibly strong for Bitcoin. They believe this consolidation is simply the market gathering fuel for a powerful breakout, and a rally that could challenge all-time highs. Both sides present compelling cases, and the truth is, the market is balanced on a knife's edge. It's a battle between fear and conviction. So I want to turn it over to you. What does your gut and your own analysis tell you? Are the bears about to take control and push us below $100K? Or are the bulls preparing for a monster rally into the end of the year? Let me know in the comments below. I want to see your price targets, the key indicators you're watching, and your overall thesis. This community is our biggest asset, and I'll be replying to as many of you as I can, because we all get smarter when we share our perspectives. If you found this breakdown useful, please hit that like button. It truly helps the channel grow. Subscribe and turn on notifications so you don't miss our next update. And finally, share this video with your crypto friends. Stay sharp, stay informed, and I'll see you in the next one.